Hello investors, welcome to Simpli Stocks. In today's video, we will understand a very important concept in investing which is called operating leverage. And it is like a secret or a hidden force because of which many companies deliver multi-bagger performance. Retail investors usually see only the returns on the charts that the stock price is going up. But in 80 to 90% of cases, operating leverage is playing out in those companies. So in today's video, we will understand what is operating leverage, and we will also look at 5 businesses where operating leverage is currently playing out very strongly. But yes, as a standard disclaimer, this video is not a buy or sell recommendation for any of these businesses. The only purpose of this video is to help you understand operating leverage. Please keep that in mind. With that being said, let's begin. First, let us understand what operating leverage actually is. If I explain in very simple language, whenever the profit growth is higher than sales growth, that is your operating leverage. I'll repeat this. If profit growth is more than sales growth, then that is operating leverage. But how can that happen in a business? Let us understand that with an example. Suppose you have a biscuit manufacturing business, and pay attention here, your business will have two types of costs or expenses: fixed costs and variable costs. Fixed cost means those expenses that remain the same even when production increases or those costs rise very slightly. For example, the depreciation of your manufacturing plant is a fixed cost. Or you can say that if you are running your plant on rent or lease, meaning you have taken someone else's plant on rent and you are producing there, then the monthly or annual rent you pay there is your fixed cost. In this case, whether you produce 1 kilo of biscuits or 50 kilos, you'll have to pay the same rent. Similarly, other expenses like management salaries, etc., also fall under this category. So to summarize, fixed cost is that expense which remains the same or increases only very slightly when production goes up. The second type of expense is your variable cost. For example, in your factory, the variable cost would be flour and oil. If you produce 50 kilos of biscuits, you will need flour and oil according to that quantity. And if you produce 500 kilos, you'll have to buy flour and oil accordingly for 500 kilos. Meaning, as you increase production, your variable cost also increases at the same rate. Now, what will happen? Suppose your sales grow by 50%. Then your variable cost will definitely rise by 50%, but your fixed cost will remain almost the same. So your total cost will increase at a rate lower than 50%. In such a case, the profit growth will be higher than 50%. I know this is getting complicated. Let us understand this better with the help of numbers. Let us say your biscuit manufacturing plant made sales worth 1000 rupees this year. You are currently running at 50% capacity utilization, meaning you can produce a maximum of 2000 rupees worth of biscuits in a year. That is your plant's maximum capacity. Your fixed cost is 300 rupees, which includes factory rent, salaries, etc. And your variable cost is 500 rupees, which you spend for buying flour and oil. So sales 1000 rupees minus fixed cost 300 rupees minus variable cost 500 rupees, your net profit becomes 200 and your net profit margin is at 20%. Now next year, you grow your business. Let us say you increase production, you go out and find new customers and you raise your sales by 50% to 1500 rupees. Your variable cost will also increase by 50% from 500 to 750. But your fixed cost won't increase by 50%. Let us assume it increases by just 10%. So your variable cost rose by 50%, but your fixed cost rose by only 10%, which means your total cost increased by just 35%. Now let us calculate the new profit. 1500 sales minus 1080 rupees total cost. So 420 rupees is your new net profit. So 420 rupees is your profit, which has more than doubled compared to the last year. So even though sales increased by just 50%, your profit jumped by 110%. This is also reflected in your profit margin, which expanded from 20% to 28%. So now we understand when profit growth exceeds sales growth, that is what we call operating leverage. What happens is when we study businesses, we usually look at factors like sales growth or fundamentals, but we often ignore things like operating leverage, profit growth, and margin expansion. However, we have seen that the businesses experiencing operating leverage tend to perform much better. their profit growth is higher, and with higher profits, they automatically become undervalued. Now, we will study 5 strong businesses that are currently experiencing strong operating leverage. Here, profit growth is higher than the sales growth. Side by side, we will also understand using these examples how you can study operating leverage in different sectors. But before that, a humble request: if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simply Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such videos every week. So do like this video, and yes, also subscribe to our channel. All right, now let us come to our businesses. So the first business is a small cap hotel company, Samhi Hotels. Hotels, hospitals, these are all your asset heavy businesses. These kinds of businesses enjoy operating leverage in two ways. First, they can increase their occupancy levels. Like earlier, if 50 rooms were booked last year, this year 75 are booked. That brings your volume growth. Secondly, they can gradually increase their room rates over time, which is value growth. As you can see in this screenshot, Samhi has been consistently increasing its rates over the last 2 years. So your costs remain almost the same, but sales go up. So your profit growth is much stronger. That's why you will see here between April to June months, Samhi's sales increased only by 13%. In absolute terms, sales grew by 33 crore. But their profit, which was 4 CR last year, increased by 353% to 19 CR. That means the extra 33 crore of sales directly converted into 19 crore of profit. After Samhi, let us look at Waaree Energies. Waaree is in the business of manufacturing solar cells and solar modules. It has 15 gigawatt module capacity and 5.4 gigawatt solar cell capacity. We have already covered Waaree several times on our channel. We also explained the difference between modules and cells and why cells bring higher margins than modules. So we won't go into those details again. Just understand that margins are lower in solar modules, but solar cells is a high margin segment. Now this 5.4 gigawatt cell capacity that you see here was commissioned recently at the start of April. So naturally that brought sales growth. On top of that, company has shifted from or is slowly shifting from a low margin product to a high margin product. So they got operating leverage there as well. That's why you will see sales growth is only 31%, but profit has grown by 93%, or it has almost doubled from last year. And you can look independently at Waaree as well. It is the fastest growing large cap business right now. Now, the third business that we will study is Yatharth Hospital. Yatharth is a small cap hospital company. It operates hospitals in Delhi NCR, Faridabad, and Agra. Like hotels, hospitals too are asset heavy businesses. When you open a new hospital, you have to bear all the expenses upfront. Doctors and nurses have to be hired on salaries in advance. Expensive machines have to be purchased and installed beforehand. Then gradually patients start coming in and sales begin to grow. In this direction, you will see that in Q1, their sales grew by 22%, but net profit grew by 38%, meaning profit grew almost twice as fast as sales. We can say that this business has also benefited from operating leverage, and here you will see their ARPOB increased by 6%. ARPOB, or average revenue per occupied bed, means how much sales the hospital earns per occupied bed per day. Basically, how much every admitted patient generates in sales per day. What's interesting in Yatharth is that their ARPOB will increase going forward. A significant part of Yatharth's business comes from government employees, the Ayushman Bharat Yojana of government, and other government related schemes. And recently, the government has revised rates for many procedures, treatments, and tests. This means now Yatharth will be able to charge more from its patients, which will increase its sales in the future and bring operating leverage. Now, the next business we will study is Pennar Industries. Pennar is in the business of making pre-engineered buildings, or PEBs. PEBs are buildings which are made with steel instead of concrete. For example, T3 terminal of Delhi airport is a PEB. Similarly, Blue Star's AC manufacturing plant in Andhra Pradesh is also a PEB. Apart from that, solar manufacturing plants and data centers can also be pre-engineered. Such buildings cost less to build than traditional concrete buildings, and they also get ready faster compared to concrete buildings. Recently, Pennar has started a new plant in Raebareli, UP, which will drive strong growth in the coming quarters. In Q1, their sales growth was only 15% and profit growth was at 21% because there were some issues related to staff and labor. But management has said that in Q2, that is in the months of July to September, they expect even better margins. So the upcoming Q2 results can be a breakout quarter for them and we may see strong growth, and that's when operating leverage will also play out. The fifth and final business is Capri Global Capital. Capri also we have covered on our channel separately once. Capri is in the business of giving gold loans, and this sector itself is currently witnessing very strong growth. Over the past 2 to 3 years, Capri has worked extensively on expanding its branch network and they are now reaping the benefits of it. Out of their 1138 total branches, about 820, that is around 70%, are gold loan branches only. Here, one benefit that will now start reflecting in their bottom line is that the expenses they incurred over the past 2 to 3 years to open these new branches will now start stabilizing. As you can see here, they have expanded their network very rapidly. In FY22, they had just 117 branches, and in 3 years, that number has gone up to 1138. That is almost 10x. And because of such massive expansion, margins were under pressure so far. But going forward, that stress will gradually reduce. Now, income will grow, but expenses won't increase at the same pace. And another major advantage will come from rate cuts. You may recall that recently the RBI cut interest rates. What happens during rate cut is that the lower interest rate gets transferred to customers immediately. But on the cost side, banks take around 6 months to reset the MCLR. So Capri will benefit from this timing gap. Moreover, in the future, whatever money Capri raises from the market to lend forward, they will be raising it at lower interest rates. So there will be a 30 to 40 basis points benefit, which will have a big impact, a big positive impact on the bottom line. In this direction, you will see that in Q1, their interest income grew by 38% and non-interest income grew by 53%. But net profit grew by 131%, or it has more than doubled from last year. So we can say that this business is enjoying very strong operating leverage and it will continue to benefit from it going forward as well. So these were your 5 businesses where operating leverage is currently in full swing. Now, if you want to check this yourself, that which companies are going through operating leverage, then for this, come to screener and in the search bar, type margins will expand or margin expansion. Then under the results containing section, click on exact phrase. Then you will get a list of companies where management has talked about margin expansion or operating leverage in their commentary. The second way is to go to the screens tab and here create your own custom screen. For example, let us put market cap greater than 500 crore, quarterly sales growth above 15%, and net profit growth above 25%, and add another filter that PE should be below 60. Now here you will get a list of several stocks that you can study further. Now if you like this video, make sure to smash the like button and you can subscribe to our channel as well. For us, your likes and subscribes are the only motivation so that we keep bringing you such high quality research videos for free. So do like this video and yes, subscribe to our channel. I'll see you in the next video. Happy investing.